Good afternoon, fellow option traders. This is Jeff. I got an email from a friend of mine who's in Australia, so unfortunately he can't use Thinkorswim, so he uses Interactive Brokers. That doesn't have the capability to look at a portfolio or a series of open positions like you can in Thinkorswim using the Analyze tab. Specifically, the risk profile graph, which is, for me, is like the answer to everything. I don't think I would be an option trader if it wasn't for this, because I wouldn't know what the heck I was doing. So he had some positions in GLD, which is a symbol that we have up here, the gold ETF that he wanted some help on. He was afraid that if gold was going to continue its bullish run, that he was going to be in trouble. And you know me, I looked at his numbers that he sent me, like what he had and how much he paid for it and how many. I said, oh, okay, yeah, that doesn't look good, but let me put it into a picture, which is what I always need to do. So this was on over the holiday weekend that he sent this to me, so I actually picked it up early Tuesday morning before the market opened. But the Friday before, the price of gold GLD closed at 164.13. So the first thing I want to do is I want to set my price slices, which is in this box here. First thing I want to do is I want two prices. I want the price then, and I want the live price right now. The market's open. It's what is it? It's Tuesday, right? Or is it Monday? No, it's Monday, September 10th. I'm okay. It's Monday, September 10th. So I'm going to get rid of this price slice because I only want two, so I'm going to delete it. And I want to change this one. I'm going to lock it, and I'm going to change the price to the close, which is 164.13 when I first look at this. Now we have two price slices up here. This is the close, the Friday the 31st, I think it was, and this is what it is currently. All right, so he had 1,000 shares of GLD. So let's go ahead and buy 1,000. And he paid $174.19 for them. He must have had them for a while. That's my bet, is that he has had this for a while, although he didn't say what date he bought any of these, but my guess is he had it for a while. And it looks like as though what he did was wrote some 10 covered calls against it. And those are September's expiration, normal September expiration. So what I can do here is, I'm going to go change this over here to my settings. That's just what I'm used to looking at. So it doesn't matter here what I pick because, well, let's just list all of them here, I guess. And we'll go and actually grab it. He had a 162 call. So my guess was that GLD was below 162 when he wrote these calls. All right, so let's get the 162, and he sold 10 calls. So we'll make this 10, and he got $1.48 for them. Okay, now I don't need this option chain thing anymore. I'm just going to do it all from the risk profile here, and we can watch what's happening to this risk profile. Okay, so he's underwater about $11,000 right now. And if he gets called out, that's pretty much he's going to take his loss of the difference between the 174.19 that he paid and the 162 call that he's got here. So he wanted to know specifically probably what he should do about that particular call. But in addition to that, he had also sold some puts, probably thinking that, you know, it's never really going to go below that. So I just closed my email program so it doesn't beep at us. So he sold some puts. So let's create a duplicate order. Oops, we don't want to do that. I don't want to do that. Why did I do that? I want to do a analyze duplicate trade. And this was a January that he sold. And it's a 140 put. We'll drag this down here to get us to 140. He did 10 of those and he collected $10.20. Okay, so the picture's looking a little better, but not a whole heck of a lot. So what else did he do? He actually also bought some puts. So analyze a duplicate trade, change it to buy, change it to put. Ooh, these are puts. Sorry. So now this isn't looking too bad right here, right? He's got those puts on there. Let me uncheck that. That's not too bad because we're looking at maybe $1,200 max loss, and that's what you see down here in red. So his max loss would be $1,200. But let's throw these puts in here that he also bought. Those were January 13, 185. And I'm not analyzing anything except just the facts here. 185, and he paid $20.89. Okay, now this looks like what I saw at that time. So at that time, if we look at the 164.13, he was looking at he was down about $873 if he would just close everything out. You just shut everything down and take the loss, right? The number was a little bit bigger. I think it was around $1,000 on that day because right now it's calculating a lot of the prices and stuff based on the new Greeks that are in there today. All right, so what can he do? Well, the first thing we want to do is we want to figure out what we're going to do about this call. So I would say, you know what, we should maybe roll it. So let's buy this thing back. So we'll say analyze opposite trade. Okay, so at that time, on the 3rd, it would have cost him $3.80 to buy that back. All right. So now it's looking a little bit more promising. And my reasoning behind this was, let's turn this into an even more bullish trade than what this shows. So if we add to that, we need to sell that this 185 put. So let's do analyze opposite trade. So on that day, this would put him down about $3,000. But let's go ahead and buy an October call, or sell an October call. So let's just analyze duplicate trade, and we'll change this to October. I need to fix these prices here. So 22.75. 75 was the price on that date, and this was $1.30. I had to do some editing here in order to get this right. I don't know, apparently I can't work on the fly here. I don't know what's wrong with me, but this was ultimately what I recommended that he do. He buy back his September 12s and basically roll them to October and roll them up from 162 to 173. and then to just get rid of that 185 put, because that's only going to make money if it goes down. So let's just eat that one and be done with it. So what this turned out to be on that particular day when I sent him the email, I said it's going to cost you about, at that time it was about $1,200. I said it's going to cost you about $1,200, but all GLD has to do is go up $2, and at that time he would have made $400. So let's stretch this out a little bit here and get a better look at it. Just click and drag along the price line here. Oh, I don't mean price line. Speaking of price line, oh, never mind. So at 164.13, if let's add another slice here. At that time I said, well, what if it's $2 more? And we'll change this one to 166.13. So I said if it goes up $2, you'll make 400 some. Well, this is showing $607 on this particular 166 price slice. As of today, is 607. As of today, this live price, doing this correction here, yes, it would have cost you $1,200, but you would have saved that trade and you would be up $1,914. This white line is the current price, so if it should jump another $1 as of this date, you make a heck of a lot of money every time this thing goes up $1. So it's looking pretty good to me. Now, I was a little choppy on this. Is there anything else I can help you with? Okay, so the probability date is 9/10. Could change that to 9/21, but all it does is this brighter blue, or this highlighted blue, that's just giving you the probabilities of one standard deviation that the price is going to be within here between now and 9/21. So the price should move somewhere in here from a probability perspective. What else can I cover for you guys? Reset parameters, yeah, okay. I've covered that on other videos. It's got $140,000 in this trade tied up. And if he would have made $2,000, that's like a little bit more than 2% in a week, so that would have been a good thing. Gold keeps going up. We could make a lot of money. It went from 164 to 167. It's $2.50, $3.50. So if we go up another 3.5, that's up here on a little bit over 170. You know, so that's like $3,700 up there, as shown right here. When I move this along, this white line price is here. The red line price is down here. Of course, if gold drops, yeah, but you know, if you were in a losing trade, let's uncheck these. You're in a losing trade. When I wrote the email, it was 164.13, so he was down $876, which actually was a little bit more on that, really on that particular date. Today it would be down $1,700, or no, it would be down $2,800 today. So he made the correction, and hopefully he's happy, and hopefully, doctor, when you watch this video, that it helps you understand the probability risk profile that is available on Thinkorswim. You can always open up a paper account and get a lot of this functionality. That's always something to consider. Go ahead and build your portfolio in here, and I don't know if they give it to you if you can't open a regular account. I'm not sure. I don't really know how that works. I'm not in another country, so I don't know. But hopefully you can understand. This helps you to understand a little bit better. And when I throw pictures at you, you know what's going on. All right, everybody. Thanks for watching. Have a great day and happy trading.